Dominos Pizza Inc. If you made it from my other video, thank you and thanks for watching. I assume you came here for a stock breakdown of some sort, so let's get into it. Like I said, Domino's is a well-known pizza company that owns many franchises across the world. They operate through three main segments. Supply chain, this operates dough making factories in the US and Canada, making ingredients for their pizza stores. This acts as Domino's cash cow and generates around 60% of company revenue. Next is their US stores, which include royalties, franchising, advertising, and sales from the place itself. This segment contributes around 32% of total revenue. Finally, international franchises, which is basically the same as the US segment but international. This was Domino's smallest segment in terms of revenue, being around only 8% of revenue. So what is the reason for the stagnant share price? Well, let's look now. First, it seems same-store growth during certain periods has declined, which is slightly concerning. International headwinds and poor performances in places like Japan and Europe have led to multiple closures being expected soon in certain regions. Then, consumers pushing back against inflationary prices and are finding alternatives. Domino's also face strong competition from many other fast casual pizza chains like Little Caesars, Papa John's and Pizza Hut. And their one strong technology edge that they seem to have has been eroded as competition upgraded their own platforms. Financially, they also face issues such as high debt, with 10 times free cash flow compared to net debt, and refinancing of $1.7 billion of it being expected in mid-2027. They also face compressed margins from factors like higher employee wages, higher food ingredient costs, and delivery costs. Finally, some regional CEOs left the chain due to long-term uncertainty. I get that seems like a lot of risk, but there is still a few things that might keep investors interested in the company. Their dividend stats seem really good with high growth and low payout ratio. Now, I get that debt has increased a lot, but Domino's through this have expanded margins slightly. Now, they may not have technology advantage, but the brand still seems intact for now. But an increase in prices could lead to more and more people leaving for alternatives or homemade pizzas. Another thing to consider though is that they have still been opening new shops across the world and closing less than they've opened. Their revolutionary technology was one of the main reasons for the stock booming in the early 2020s, but more recently this technology has fallen off. But is it still useful? Domino's technology is still great and still contributes to a majority of sales, but more recently competitors have caught up with it and this has shrunk Domino's technology moat. But the technology itself is still extremely useful and is being expanded. But the increase in competition is the reason many analysts say their technology advantage is gone. Overall, they still have a competitive advantage, but it's not their tech. They also have got new management, which could be another reason for the recent decline. But there is some bull cases for Domino's that could change investors' mind. First, the asset-light franchise model that Domino's mainly operates gives them high free cash flow while taking less of the risk. Next, Domino's have massive scale advantage on competitors with over 20,000 locations in 90+ markets, while still expanding into others like emerging markets. The asset-light franchise model helps Domino's promote its brand and its products, which in turn makes franchisors happy as they make more money, which makes more people want to open a Domino's store. Third, the tech advantage Domino's had may have been eroded by competitors, but it's still a big part of Domino's business, which can lead to improved margins. Domino's, because it's an asset-light business, is able to have high cash generation compared to capex, which can lead to dividends or share buybacks. Finally, they have experience in the industry along with a growth-driven mindset, hoping to expand and innovate over the years. Finally, like always, I give my opinion on the stock. I feel as a consistent Domino's consumer myself, I really don't see the brand going anywhere. I think they have a very unique business and I think it's hard to replicate. They have a lot of data and if done right, can make efficient stores and efficient delivery. But definitely now I feel Domino's is facing some issues with customers, employees, regulators and ingredient cost. But the thing with Domino's, especially compared to many similar, is that their extremely asset-light franchise model helps them and makes them stable during a prolonged economic downturn. Now they are trading at a decent amount above average, but I personally feel right now it's at a more stable price. But Domino's will have to be mindful about their growth, as their debt is a major issue that I think they need to look into, especially when 2027 comes around. They'll have to be prepared. And before I get to the end of this video, I want to say this is not financial advice. Please do your own due diligence. Now, as I get to the end, I want to say thank you for watching. I really hope you enjoyed. So like always, I ask my questions. Has Domino's lost its edge completely? Is competition finally caught up with them? Or is everyone skipping over another company and another great opportunity? Comment below your thoughts, and salon.